If you take a look at a FIG pro forma, you're going to see specifically on page 3 on the right side of the page, the expenses breakdown. This is where we attempt to say, we think that the operating expenses are going to be X. One of those line items is insurance. We've talked a lot about HOAs on these videos. The HOA, remember, carries the majority of the insurance that you're going to need on the property. That's the master insurance policy. If we get a bad hailstorm, right? If we get a fire, something like that, it's the HOA's master policy that kicks in. But why is there still an insurance line item that I would add looks relatively low? That's your liability and your HO-6 insurance. Some people call it walls in or a condo policy. For example, if the tenant wants to sue the landlord, the HOA's master policy doesn't give that kind of coverage. You need some liability coverage. In addition, what if your unit floods or there's some kind of an insurable event inside that's not covered by the master policy? This is why you have that HO-6 policy in place. And I want to clarify, flood, that's like a broken pipe. It's not like waters rising that we see happen, like a natural flood that's not covered. So in short, you need that loss assessment coverage that comes from a liability or an HO-6 policy. That's going to cover those events that the master policy, for the most part, won't. Or it pays you so that you can pay your share of the big master policy deductible if there's a big fire that wipes out the units of multiple owners in an attached structure. You got to have an HO-6 policy. Some people try to not do it. We've had a few people have events where they had to come out of pocket with a lot of money because they didn't do that. HO-6 policies are usually pretty affordable. I would say on average $30 to $70 a month per property. So definitely look into that and reach out to your FIG agent with any questions.